Bill Baruch is joining us now. Just wanted to document a few things, Bill, that you've done. Thanks for joining us. And I'm going to ask you to, I'm going to beg your pardon as well if I have to break away from this to go to D.C. for some news that we are expecting momentarily. So if I have to do that, forgive me. But you trimmed Apple. Let's talk about that as you suggest that momentum has stalled.
Yeah, listen, we came down from 6% position in Apple down to a 5% position in Apple. But here's the problem, though. We leaned into Apple in Q4 with their Mag 7 breakout thesis, and it played out and melted up with the 278 price target is what we're looking at. We took it down from 6% to a 5% as we're raising cash and able to rotate around a little bit. We still like this name, but there was a lot of fears around the refresh cycle in Q4 that I think they were wrong, but overall, there's some fears warranted around sales growth projections, and I'm okay owning it a little less than the benchmark right now.
So you bought Mobileye and Marathon Petroleum. Both of those are new positions. Do I have that right?
Yeah, Mobileye is a new position. Marathon Petroleum is a name that we've throttled in and out for over quite a while. But I'll start with Mobileye. I think they're right in the thick of the autonomous race here. Their technology is a great piece to be competitive in what's going to be taking place in the overall environment. Now, the interesting thing with Mobileye, it was beaten down hugely over the past year. It's now regained the 200-day moving average. It's now back above that gap that it broke down from. Now, Intel is an 88% owner of this name. And so the only fear around it here would be if they shake up and Intel does sell some of their shares. But otherwise, Mobileye, I think autonomous driving, I mean, they're going to be right here in the thick of it with all this, with the competition. Their stock has a lot of room to the upside.
Yeah. Why'd you sell T-Mobile?
You know, T-Mobile, I think momentum-wise, so this is a lot of portfolio management. Momentum-wise, T-Mobile, we had some price triggers that came out about 2 weeks ago. We wanted to see as we got through the new calendar year, and then some downgrades today. So like Apple, taking down positions there, took down position in T-Mobile. That way, we're able to buy back in names like this. In Mobileye, we're able to put the cash into Marathon Petroleum. Again, refiners, very bullish seasonally in January, and we have some other buys as well.
I see that you bought more Uber, which we were just discussing. Bryn suggesting could have a 9 handle on it by the end of this year. There seems to be a suggestion here that you could have momentum return to this name as they announce that accelerated share buyback today.
Exactly. The free cash flow and the profitability around Uber, I mean, this name was almost left for dead in an autonomous driving race. I don't think that that's the case at all. And last time I was on the show in December, I was talking about the $60 area as being support. It's held that. We added to this name the first day of the year, and it's starting to already pay off. I think the profitability here is going to continue to expand, and I like that target with the 9 handle that Bryn mentioned earlier.
And you bought AMD. We were having a conversation earlier about whether the chip trade was about to get, you know, some sort of resurgence. Maybe Foxconn is the thing to do it. Jensen Huang tonight in Vegas, maybe he's the thing to ignite it. In some respects, NVIDIA has already looked like it wants to break out yet again. Why AMD here?
If you go back to December, you know, as we continue to move around a little bit, we did raise some small cash in NVIDIA and Micron ahead of Micron's earnings. So our whole plan was here to rotate a little bit tactically, especially here in AMD. Beaten down, left for dead, like Uber almost. As additionally, a tax loss harvest selling and AMD, I think, overblown the downside. But we take a step back, look at AI and the profitability, the free cash flow that AMD can generate from AI. 164% year-over-year free cash flow is what they're looking for. I think that this thing is way overdone to the downside, at least tactically right now. We see some great upside here, but it may be a name we find ourselves holding all year.
Okay. Good stuff, Bill. Thank you. I appreciate you. Bill Baruch with those trade updates for all of you, really.